Tomorrow, today in this video, we are going to talk about FDI and FPI. And FDI stand for foreign direct investment, and FPI stand for the foreign portfolio investment. FDI and FPI, these two components is a major economic tool for the purpose of defending the our foreign reserve. Why I am saying this? If we seeing the past history data of the Indian statistics related to the Indian economic in context of the import and export, then out of those data we can conclude that the India currently facing the trade deficit issue. Basically, the trade deficit issue is an issue where your export is less than your import. In the simple manner, like suppose that a resident company of India or the company situated in India exported a good of rupees 10 billion of dollar, but on the other hand, those Indian company imported a good of 12 billion dollar. So basically, the difference between these two is a $2 billion, and $2 billion is a trade deficit, and directly impacting our capability of reserving the foreign reserve. Because in that particular scenario, uh, uh, we need to expand the foreign reserve for the purpose of smoothing the economical activity within our country. So in that particular scenario, FDI and FPI are acting as a tool for the defense for the purpose of reserving a good level of foreign currency in our Indian economy. Like whatever amount come from the FDI and FPI route, these amount not need to be uh, given to the person who invested to the FDI and FPI route in a short run, except in some exceptional economic scenario, or you can say the unfavorable economic scenario like COVID-19 and the global economic crisis. So in that particular scenario, we need to pay off the FDI and FPI in the form of the foreign currency. So that time these act as a defense, as well as this act as a you can say that it is a FDI and FPI is a prawn for the economy as well as a con for the economy. But I think it is a more advantageous for the Indian economic, for any growing economic in the world, because it helps the government to maintain a good level of foreign reserve. Now let's talk about one by one each FDI and FPI uh, in a very descriptive manner. So I think from this video you can get the overall good idea about the how what is the FDI and what is the FPI. So let's forward to the FDI topic. So basically, the FDI stands for the foreign direct investment. Foreign direct investment basically means the group of association, group of a person, individual, or the foreign government wants to invest their fund in India for the purpose of generating a sufficient level of profit, and they wants to participate in the day-to-day business activity in the operational management related thing, so that the companies will able to achieve their long-term objective with available resources, so that the overall basically the overall purpose behind the FDI is a wealth maximization, not earning a return, but for the purpose of capital appreciation, as capital appreciation, wealth maximization, and earning a sufficient level of profit on their investment. So basically, the FDI has a three horizontal, basically the horizontal, vertical, and the hybrid and conglomerate. Basically the hybrid or conglomerate is nothing but it's a combination of the horizontal and vertical. But there is a very interesting thing like the horizontal and vertical. Like horizontal FDI is the FDI, the person who wants to invest in a particular company, and suppose that they want to invest their funds in a steel sector, and those person have the prior idea about the steel sector, how the steel sector work, and what is the expected level of ROI. Then the investment made by those person in a um, particular company under the FDI, and then those FDI is called horizontal FDI. Basically, the in the same line of business, but in the vertical FDI, they want to invest their fund in a different line of business in which they don't have a prior experience in. For the purpose of, as I'm saying, buying a ownership, establishment of entity, entering into a local partnership, entering into in a contract with a government body for the purpose of development of infrastructure related project in India, like development of canal, port, airport, railway lines, etc. Now let's come to our FPI portion. FPI stands for the foreign portfolio investment. Basically, it's a portfolio of the investment whether on which the investor wants to earn a sufficient level of return but not a profit, and they don't concern about how the managements are going forward, what is their future course of action, whether their business activity is aligned with their goals and objectives stated in the memorandum of association, whether their internal control is as per the article of association or not. So basically, MOA and AOA, these two are the bibles of a company. You can say that. So basically, the person who wants to invest through the through the FPI route, they don't need to bother about the things with how the managerial related activity are going on at a managerial level in a company. So it is also divided into three horizontal, like horizontal, vertical, and hybrid or conglomerate. These are the same, but difference is that one person is investing with a point of view FDI, like for the purpose of giving owners, and other person is investing their funds from the point of view generating a sufficient level of return, like buying a equity shares, buying a debt instrument, buying a bonds, investing a gold, like gold monetization scheme, you can say, and treasury bills, short-term borrowing notes, etc. Now let's come to the major differences between FDI and FPI. So basically, the first basic difference is profit versus return. Like the person who wants to invest their fund through the FDI, they basically wants to earn the profit but not the return. But the person who wants to invest their fund from the FPI, they basically concerned with the return. Return is you can say the return is a related to a very specific term. Suppose that if a person wants to invest their fund in a particular debt instrument, or debt instruments, the amount of interest they are going to generate from that particular debt instrument, it is a fixed amount. Suppose that a Mr. A invests in the bond of let's say Reliance Industry. It's a triple A rating. So the particular rate of the bond is, let's say, 7%, then the return is very fixed to a certain number, but the profit is unlimited. Next point is that the operational management thing. As you mentioned, the person who invested through the FDI route, they more concerned about how the operational management are going on at a company floor level. But in the return, the investor basically don't need to bother about how the operational management things are going on at a organizational level. Like employability, FDI directly helps in the generation of the employability or making a good working culture at a country atmosphere. Second, regulation. So most the FPI portion is regulated by the SEBI. Basically, SEBI stands for the Security Exchange Board of India, and the FDI portion is regulated by CG in the consultation or in the suggestion of RBI with RBI. Risk stability. The person who invested their fund through FDI route, they take a more risk, but the person who invested their funds from FPI route, they take a lesser risk. So this is basically the risk stability. In the FDI portion, risk is high, but in the FPI portion, risk is low. Direct impacting growth factor. Both the FDI and FPI impacting our growth factor of economy. But if we consider in the major line of defense, FDI is contributing to more in the economic growth as compared to FPI, because FDI directly infusing their fund for the infrastructure related development, for the generation of employability, like local market impact. FPI does not able to impact as much local market as impacted by FDI route. Suppose that the Walmart, the Amazon, these two companies came into India and totally disturbed the local market. So basically, these are the example of the FDI. For the FPI, recently one of very big deal achieved by the Indian government for the purpose of manufacturing of semiconductor. So between Vedanta Group and Foxconn company. Foxconn basically is Taiwan's. You can say that it's not a it's a Taiwan's largest semiconductor manufacturing entity. Now these two companies comes together and they want to set up their factory in the Ahmedabad location for the purpose of manufacturing of the semiconductor in India. The whatever amount invested by the Foxconn company in India, those investment is called the FDI. That means the foreign direct investment. But the suppose that now the Apple wants to enter in that particular joint venture between the Foxconn, what happened within Foxconn and the Vedanta, and they basically wants to generate a sufficient level of return. They basically state that I want to become a part of this joint venture, but I don't able to participate in the organization activity. Just I want to invest my money. So let's say Apple invested a $2 billion. So that $2 billion is called the FPI. So basically, the FDI is in the nutshell. The FDI has the capability to impact the economic or the local market at a to the major extent level, but the FDI is impacted, but not in that significant level as the FDI impact. Now let's forward to the some routes like FDI. The investment come under the category of FDI basically from the three routes: automatic route, government route, and prohibited route. Prohibited route itself suggested that the in those sectors the FDI shall not be allowed at any cost. Let's first talk about the prohibited route. Under the prohibited route, atomic energy generation, uh, any gambling or betting business, lotteries, investment in cheat funds like the best example is Sahara. Nidhi company, agriculture or plantation activity, housing, real estate, except township, commercial project, etc. Trading in tenders, cigarettes, cigar, or related tobacco industry. So in these few sectors, the FDI shall not be allowed. Let's come to the automatic route. Automatic route. Just I want to give a brief. The automatic route is a route on which the particular person does not require any approval from the RBI or central government. So if you can say that infrastructure company, in the infrastructure company, security market, insurance, medical devices, pension, petroleum refining, and power exchange. On the other hand, the government. Under the government route, the person who wants to invest their funds in India, they want to basically take the approval of the CG as well as the RBI whenever it is applicable, as the case may be. Like banking and a public sector, banking company and a public sector company, broadcasting services, core investment company, foods product retail trading, mining and minerals, print media, satellite, and the operational. So basically, these are the you can say the holistic view of the FDI, under which sector it is prohibited, under which sector it is allowed for taking the approval from the various authorities, and under which sector we does not require any approval. Now let's come to the some statistical data related to the FDI part. Now, if we say that recently from the 2012 to 2022, our compounded annual growth of the FDI inflow in India is 2.78%. It's not a decent level, because if any country wants to perform very well in the terms of GDP growth, then at least the FDI inflow is equal to the growth of Indian, you can say the GDP growth rate. So major portion which came into India in the terms of FDI inflow from the US country itself. Like you can say that in the 2022 up to the 15th September, the $58.8 billion FDI inflow was come to India. But out of the $58.8 billion, $43 billion alone was coming from USA. So basically, the US is the major contributor in terms of FDI inflow. Now let's And one very interesting point, like world FDI inflow in India is 2.78% growing at the rate of CAGR. But in the terms of US, it's a growing at the rate of 6.67 CR year on year. It's a good symbol. It's also enhancing the geopolitical relationship between Indian government as well as in the foreign US government too. Now let's come to the some statistical data related to the FPI chart. Basically, like if you consider that from the 1991, if we consider the data from the 91 to 92 financial year, then till that time our growth rate is the negative 232%. But if we consider from the 15 16, it's growing at an annual rate of 46.4%, and total inflow under the FPI category is from since 1991 is the 24 lakh 44,910 crore rupees. Lakh crore rupees. It's a good amount. So you can see that accordingly in which year what contribution was coming in India under the FPI route is, if you see that in the 2020 and 21 itself, 2,67,000 2,67,000 crore rupees alone come in India, under the FPI in the year of 2021. So at the end, I am resting my voice here, and thank you for watching my video. If you have any doubts related to the FPI and FPI, then please comment below. So I am very happy to now answer those questions. So Jai Shri Krishna.